Last week, the U.S. nat gas market experienced significant downward pressure, with futures dropping to multi-month lows. The market closed at $1.96, down 4%, after hitting an intraday low of $1.92. This decline occurred despite intense heat across much of the country, which drove strong cooling demand, underscoring the strength of bearish factors in the current market situation. Meanwhile, the formation of Hurricane Debby in the Gulf of Mexico brings new uncertainty to the market. The storm's potential landfall could significantly affect both demand and production. A direct hit might cause power outages, reducing electricity demand and natural gas consumption for cooling. The hurricane could also disrupt gas production in the Gulf region, further complicating the supply-demand balance. Production levels remained high, staying above 102 billion cubic feet per day, with a 7-day average output of 102.5 billion. This ongoing supply surplus continues to push prices lower, overshadowing the positive impact of weather-driven demand. Meanwhile, U.S. gas companies continue to reduce the number of active rigs due to low gas prices. Last week, the natural gas rig count dropped to 98, down from 101 the previous week and 128 a year ago. Intensifying heat may boost nat gas futures in early trading next week. Weather analysts report that hot high pressure will dominate most of the U.S. through early next week, with highs ranging from the upper 80s to 100s. This pattern is expected to drive very strong national demand over the next 7 days. Moreover, the next 4 reports are expected to be bullish, meaning that the current storage surplus compared to the 5-year average will drop from 441 to 389 billion cubic feet. Overall, in the upcoming week, the nat gas market will encounter several competing influences. The ongoing hot weather across much of the U.S. is expected to sustain strong cooling demand, potentially supporting prices. However, this positive influence will likely be offset by persistently high production levels and ample storage. Considering these conflicting factors, the market outlook remains cautiously bearish. However, the unpredictable nature of Hurricane Debby could lead to swift changes in market sentiment. Any changes in weather patterns and potential storm-related disruptions to Gulf Coast operations could affect the prevailing bearish trend. The market may test key support levels, with $1.90 being a crucial point to monitor. Depending on how traders interpret the latest hurricane news, there's also a possibility of a gap lower at the Sunday night opening. Nevertheless, given natural gas's propensity for sudden short-covering rallies, selling at current levels presents limited downside risk but significant upside potential. A move above $2 could invalidate bearish positions, while support at $1.90 may draw in buyers. Both scenarios have the potential to trigger substantial short-covering rallies in the upcoming week. Please like, subscribe, and comment to support the channel. See you in the next one.